Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for November 20th, 2022. First and foremost, I want to say happy Thanksgiving to all of you that are in the United States. I hope you have a great Thanksgiving holiday. I hope you're safe and you have fun with your family and your friends if you happen to be seeing them throughout the course of this week. So, being that it's Thanksgiving week, holiday week, a lot of the data that we're going to get this week is jam-packed into the first couple of days of the week. So Monday, Tuesday, Wednesday, mostly Tuesday, Wednesday, we're going to see a lot of data coming out. There's going to be some extra volatility, but don't put away your mobile devices and your trading accounts just yet before everybody celebrates, because we might be celebrating Thanksgiving in the US, but around the world, no one else is. So we tend to get some pretty explosive moves around the Thanksgiving holiday. I'm going to talk about all of those setups here in just a moment, but I want to say, if you like these videos, make sure you give us a thumbs up, subscribe to the channel so you don't miss any of the week ahead videos. We're going to talk about all the different markets. We're going to talk about what's happening in currencies, but we're also going to take a look at the indices. I want to take a good look at gold and what's happening in the bond market. So without further ado, let's get into the markets, and I'm going to actually turn on Forex Analytics just so you can see the main traffic light page that we have for the Forex Analytics system. We cover 30 different instruments here, so if you ever want to get your analysis, as we update it throughout the course of the week, and make sure you just take a look at the Forex Analytics dashboard here. And then you can also do it on your mobile device as well. We're one of the very few companies that offer a free mobile device of analysis around the clock. So check that out. Anyway, let's I'm going to go actually into live charts, and we're going to do a little bit of analysis here, and so I can draw on the charts, and we're going to go back to the euro. And last week we talked about the euro getting to that 200-day moving average, and it looks like it's struggling. And I know it's really tempting that you want to short the euro dollar with the 200-day moving average right there. Look, I've played both sides of the euro this week, and one of the things that I've noticed this week in particular is we've tightened up into a very, very strong, or very, very tight, triangle formation. Now, triangle formations are interesting, especially when they come off a very bullish move like you see in here, and you saw here. Okay, when you get bullish moves like this, usually you get what we call pennants, or this is a continuation pattern. So theoretically, this chart pattern has a higher probability of playing out to the bullish side. Now, the reason why I say that is because you're looking at a 4-hour chart, you're looking at this pennant, and yeah, it does set up bullishly, but we all know, as we were just discussing, that you have that 200-day moving average right here. So the one thing that I want to say, just in the event that we do get a bullish breakout to the upside, is if we do, then it's breaking above the 200-day moving average. That it's probably going to have some pretty big buying that comes in through this 104.50 to 105 level. If we start to break that, I think a lot of people don't expect the euro to move up to those levels going into the fall. We have this energy crisis, and it's going to be a cold winter, and yada yada yada. There's all these excuses why the euro shouldn't go up, which may be even the reason why it does go higher. The reason why I want to point it out is, in the event that we do get a breakout to the upside, just realize we are clearing the 200-day moving average. That just gives it that little extra boost to be bullish. Now, I'm not going to just look at the euro dollar, obviously. I want to actually take a look at the sterling, because the sterling is holding right up against that 120 level. Following the autumn budget, the UK budget initially saw a little bit of a move lower in the sterling, but now we rallied back and we're consolidating just shy of the 120 level. So think about it. If the euro dollar breaks above 105, which is above the 200-day moving average, the sterling breaks above the 120 level, that's bullish. Bearish the US dollar, right? See, whenever I can get a move in the currency market, and you see all currency pairs moving in one direction, especially if you're looking against one specific currency like the dollar, that gives that breakout more validity. So I'm sure you're writing down right now, euro above 105, bullish. Sterling above 120, bullish, right? Let's take a look at some other dollar pairs just to see if we can get that confirmation around here. You know, I want to take you over to the Swissy, because the Swissy, we had this really massive sell-off. I'm going to actually I'm going to do a little bit of drawing here on the Swissy, since it's not, we don't have any drawings on here right now. What you'll notice is we had this false breakout above the highs, right? That's a double top. You can see right there, right? Double top. Okay, that double top, here's your neckline. So that move basically is it complete and more than completed. Okay, we broke below the 200-day moving average then, and then what you'll notice here is we set up a, you know, we have a lot of pivotal areas right around this 93.60 level. You can see how we broke below those lows, then we bounced back. Now, if you're looking at the dollar Swiss and you go more intraday, this was, and I'm going to show you really quick on just on a 4-hour chart. This was an inverted head and shoulder pattern. Whoops, that's not what I wanted. Let me go ahead and grab this. Okay, that was an inverted head and shoulder pattern. You guys see it? Okay, that inverted head and shoulder pattern actually still has some distance to go. So, you know, when you're putting this all together and you're like, wait a second, so, you know, how about if, you know, the dollar is almost finished with this you know, inverted head and shoulder pattern? How about it, you know, has a little bit further to go, and then, you know, we stop here and then we roll back over? Would that be bullish the sterling? Sure. You know, that would mean the sterling probably comes down like this and then rallies. Whoops. Maybe the euro just consolidates around here and rallies, right? Okay, so think about dollar weakness as it's coming through. Here comes the Aussie. All right, so the Aussie, we have this big inverted head and shoulder pattern. I think I showed you this last week, if I'm not mistaken. So let's get a little bit more specific with this. You can see, and let's take that neckline. Let me move that, and I'm going to actually make it a little bit more cleaner, right? Here's your head to neck. Neck, whoops, that's not what I want to do. Stand by, grab the wrong thing. Neckline, extension, takes us all the way to 69 cents on a full extension of the inverted head and shoulder pattern. Again, if the euro breaks above 105, sterling breaks above 120, Swissy, you know, starts to resume its downtrend after completing the inverted head and shoulder pattern, the Aussie might in turn rally back towards the 200-day moving average to complete the inverted head and shoulder pattern. Here's one shoulder, here's the other shoulder, here's the neck, or head, excuse me, head, neck. There you go. Head and shoulders, knees and toes, knees and toes. You guys and gals ever seen that with your kids? Of course you did. All right, now here's the Kiwi. Take a look at the Kiwi dollar. We've rallied back to the 618 retracement, and we're stalling ahead of the 200-day moving average. Now, one of the things that I noticed about the Kiwi is that the pullbacks have been very, very minimal. And when you get a minimal pullback like that, like you're seeing in the in you know, some of these currencies, then that means that we're probably building some sort of bullish wedge, something that looks like that. So we might still come down a little bit. I know people are probably looking at that going, hey, it's a double top. It's not a double top until you start breaking below, you know, these levels. Like that would be a double top. Then you'd see an actual breakdown. Still could happen, especially with next week. Do you guys know what's happening next week? Oh, wait, maybe you're listening to this video because you want to know what's happening next week. We have the RBNZ, right? The RBNZ is expected to raise rates by 0.75% or 75 basis points. How about if they not only raise rates, but then they are hawkish? Well, we're going to get a bullish breakout above 62 cents, right? Now, the flip side to that is, how about if they give us a dovish hike? They hike and they're like, well, you know, that might be it. Well, if that's the case and we get a dovish hike, well, we could see a breakdown. So the Kiwi is set up for next week. So we do have the RBNZ rate decision. That's going to be on Wednesday morning, Tuesday night if you live in the US or in Canada or in North America, way early in the morning if you live in Europe. Okay, a couple last currency pairs I want to talk to you about. I want to talk about the dollar Canadian. I think we drew this out last week. Yeah, we had this head and shoulder pattern. Look, the head and shoulder pattern here, just like the Aussie, it still has some work to do. Okay, so here's your head to neck. Here's your shoulder. Here's your shoulder. Here's your head, right? The distance from the neckline lower is the 130 level. It takes us back close to the 200-day moving average, right? Thereabouts, roughly. And remember, I'm drawing this roughly. If you want to be a little bit more specific, you could probably actually extend that just a little bit further towards 130. I think that's probably more accurate. Anyway, it still has some distance to go. Now, if the dollar gets a little bit of a lift first thing on Sunday night, Monday morning, maybe we see 135 before we start our trek lower towards the 200-day moving average. For those of you that are looking to play into dollar shorts, this is one that sets up really nicely alongside the Aussie dollar that I was just showing you moments ago. Now, as a couple of things, what else is happening this week with Canada? You have actually the retail sales that will be Tuesday morning. We'll be covering that on the Face show come Tuesday morning. So we'll be covering retail sales live. So make sure you're logged in and listening in. It's free. Now, speaking of free, let's talk about this really quick. If you go to forexanalytics.com, and let's go over to the webinars where you can see we have the Flow Show, which broadcasts every trading session in Europe. We have that with Ryan Littlestone as the host. And then we have Stelios and K-Man that join Ryan every morning, talk about what's happening in Europe, give you some good setups. And remember, this is free. We also have the free Face show that's in North America, and that happens every single morning at 8 a.m. Eastern. We give you some setups that are happening in North America, and that's when you have the full or most of the Forex Analytics team joining in there. Now, speaking of which, if you haven't tried out Forex Analytics, make sure you try it. It's $1 for 10 days. Okay, after that, it's $189 a month, but try it out. And when you're trying it out, make sure you download the mobile app from the App Store or the Google Play Store. Now, if you really want to learn how to take advantage of Forex Analytics and you want to get it included with something, well, check out the Trader Funding Program. We have traders every single week that access our funds to trade. If you want to access larger amounts of money to trade because you want to leverage up the market a little bit, you want to really take advantage of your trading prowess, and you just don't have access to capital, well, come check out the Trader Funding Program. Because not only do you get to trade our money once you pass the assessment, but you don't take any of the risk. You keep 75% of the returns, and you get Forex Analytics included, so this way you can be involved in our community. So you're not alone. You're not doing this on your own. You're doing this in a community where we have chat rooms that we talk about everything that's happening in the markets, whether you want to talk about setups in our general chat room, what's happening in the E-mini futures, what's happening in currencies. You want to see what everybody's specifically trading, what their people are posting, they're getting in, getting out, talking about macroeconomics. You want to go to the news and research room so you can stay up to date on everything that's happening in the markets. Check out, and we even have a World Cup discussion happening right now because the World Cup is happening this next week. And I'm sorry for those of you that are actually at the World Cup or going to the World Cup and you can't even drink beer. Man, crazy. What's wrong with this world? Anyway, all right, so check it out, all of us at Forex Analytics. Now, back to the markets, and let's get to, I really want to discuss gold, because gold, even though we had a nice bounce, do you know what specifically is happening in gold that really bugs me from a technical perspective? Is that we're not, and you'll notice it right here, we are not making higher highs. And as long as we stay below that 200-day moving average, I'm not very constructive on gold at this moment. Would I be more bullish gold on a dip back down towards 1730, which we're getting very close to, or maybe even 1700, 1680 once again? Yeah, I'd be more bullish and more constructive on buying gold down there, because if you look at it, like technically, let's try to use our imaginations a little bit. If you see a little sell-off back down towards 1680, then you see a reversal, then at that point in time, you have what we call an inverted head and shoulder pattern. This being the head, these being the shoulders, this being the neckline. So theoretically, I could still see a pullback in gold, and that would mean a rally in the dollar. But think about how far the dollar might go here. If the dollar, we get a little bit of a recovery because gold is pulling back, and we see the dollar rally back towards, let's just say, the underside of this broken channel, then theoretically that would mean that the euro could indeed move higher and the sterling could move higher as well. So that's how I'm looking at the dollar. That's how I'm looking at gold at the moment. I'm looking at these really good setups they're setting up, and could they happen as early as next week? They could. Now, I always like to talk a little bit about when we're around the Thanksgiving holidays. I remember one Thanksgiving holiday. It was probably about 2005, 2006, and I was carving the turkey, and I was looking at my laptop that was sitting next to me as I was just managing the markets, and then all of a sudden you get this big breakout, and I remember 200-300 pip moves happening in currencies, and that I don't want to say that can happen, that's going to necessarily happen this time around, but what we've seen recently is we've seen increased volatility in the currency market. The currency market has given us such amazing volatility over this last year in 2022 that you have to assume that because we've seen big moves in the markets as of this year, there are risks that you see these big moves happen, as we go into these holidays. Now, when you're taking a look at like the sterling or the euro, once again, let me just go ahead and take us into more of an intraday type of chart. You can see that we got these big tight triangle type of formations forming, whether the euro ends up being some sort of pennant or a bull flag maybe that looks something like this. We could actually see some pretty big breakouts, especially if we continue to consolidate over the course of the next few sessions as we get past all of this data. Now, one of the last things that I wanted to bring to your attention is I wanted to take a look at the 10-year. The 10-year, we've seen a bit of recovery in bonds, as the bond market has rallied, yields have come down. But what happens if the bond market starts to show weakness again? One of the things that we have not been able to see in the 10-year is we have not been able to see us break back above, the big breakdown point. And what you're also noticing here is we're making lower highs. And if we were making lower highs and we continue lower like this, and we come back down to challenge maybe some of the support, then that would argue that lower bonds mean higher yields. We'd see a dollar rally for a little bit, and then a pop back would allow for some dollar weakness as bonds start to strengthen. So these are all setups that I think are developing, that I think we need to keep an eye on, especially as we head into the holiday weekend. Now, let me just say a couple of things really quick. If you like this video and you think this is going to help prepare you for your trading session, next trading week, make sure you give this video a thumbs up. I know the team here at Forex Analytics really appreciates that. We film the videos, edit them, work throughout the weekend to make sure that you have this before you start your trading week next week. So make sure you give us a thumbs up and subscribe to the channel. I want to talk also really quick. On Tuesday, we do have some FOMC members. We have Meister, George, Bullard are all speaking as well. We have a bank holiday in Japan next week that's early in the week. We also have PMIs in Europe that are coming out on Wednesday morning. We have services and manufacturing PMIs all through the Eurozone, also in the UK. We have durable goods orders in the US, unemployment claims that are going to be moved up a day to Wednesday. And then we're going to have some housing data and University of Michigan consumer sentiment and inflation data also moved up because of the Thanksgiving holiday as well. Now, before you actually check out for the week, we're going to have the FOMC meeting minutes, which are going to be fairly important because this is going to allow the market to get one last gauge of how they feel the Fed might move based on the last meeting, but what's going to happen going into December, into our last FOMC meeting, which I believe is December 15th, if I'm not mistaken. Then we head into the Thanksgiving holiday. Volatility is going to get it's going to get a little bit more, I want to say the liquidity is going to get poor. We might have increased volatility if you see some moves happen in the market, but we also have German IFO business data coming out on Thursday, and on Friday morning, Thursday afternoon, late in the day, we're going to have retail sales out of New Zealand. So it's going to be a pretty busy week next week, even with the Thanksgiving holiday. But once again, I want to say thank you, and I'm going to give thanks to you for listening to the week ahead video every week. You know, commenting down below, jumping into the comments, and you know, if I miss anything, or if there's something that I'm saying that you'd like to see some clarification, or maybe there's a setup that you're looking at, jump in the comments, leave them down below. Thank you all for listening in. I appreciate it, and I hope you have enjoyed this week ahead video. I'll see you on Monday morning on the Face Show. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.